JB here. Hope everyone's doing outstanding. December 2nd, Monday, 2024. Talk really quick about the market, some names I'm looking at, some names I added, and go from there. Take a look at the S&P, new all-time highs. The SPY's over 604, and the melt up continues. Another tight trading session. I keep saying it's just like what the doctor ordered and carbon copy setups, but it seems like every session over the last 2 or 3 weeks, it's been very tight ranges, which typically you want to see before the next leg, and especially with all the other, well, we had Nvidia earnings and all these possible market catalysts are kind of out of the way. It's almost like the market's just set like on autopilot, and we're gonna hit 610 on the spy. Nothing's ever certain. Who knows, right? So I'm not saying it's 100% certainty, but that's kind of, if you do this long enough, that's kind of like the feeling I get here. So not only that, like the upper Bollinger Bands at 609.53. So another day tomorrow of similar somewhat melt up. The upper Bollinger Band's gonna be 612, and so there's plenty of space for upside as opposed to a huge gap and run. So kind of the trading I prefer. I just wish small caps didn't take it on the chin today. But that's overall market. So I talked about that 600 handle. Tough to have resistance here on the SPY without having previous areas that we found resistance. But that upper Bollinger Band's a spot I'll be watching over the next day or two to make sure if we do get a gap up and run to 609 and change at 609.53, that'd be a spot I'd be a little more cautious on. And then the small caps, and then of course, unfortunately, IWM all the way down to 240 right after the open. It was a 240 and 2 and change down to 240 after the open, and then small cap names took it on the chin. Of course, I guess after the huge rally last week, the previous weeks, and I thought it was going to catch up to the outperformance of the S&P and the NASDAQ, and maybe it's not today, but maybe later this week. We still have a couple more weeks left in 2024, but disappointing. I just want to see it now 240. Maybe I'll put a line in there. It looks like it held, looks like Monday last week, so that could be a key spot. But it reversed the lows back into the green right now, so that's looking pretty good as well. And then also, this week we have earnings. So I think tomorrow afternoon, I have to look at the exact ones, but Fed Chair Powell speaks at the New York Times Deal Book Summit. I think that's Wednesday. I'm not sure what time it is. I don't think that's going to do anything earth shattering. And then the jobs report. I think that's the biggest, in my opinion, of this week, the data piece. We'll have the November jobs report on Friday. I just have this feeling it's going to be like a major surprise. So, I mean, maybe it's going to be the other way around, right? A lot of times you're expecting a weak number and it comes in higher than expected. Now I think it's going to be a strong number, and maybe it's the other way around. But definitely going to be one to watch on Friday. I think by that time, the SPY is going to have tested 610. All right, so now individual names, and I probably even shouldn't talk about it, right? I think there was a rule back when especially the last year and a half on Roku. It's like I don't jinx it, but if you don't know the story on Roku, it's one of my favorite names from back in the day when it was $18. Many years, I don't know when it IPO'd, and it was a name I knew about before it IPO'd, and then once it IPO'd, I watched it. I said, "Wow, what's this?" It's down. It was $18, and then they reported earnings. Then you see that, hey, this is not just a hardware company. And they're still in the midst of their becoming just pretty much software, monetizing their platform. But there's a lot of competition. I think that's always the reason why Roku it trades rough on quarters, because there's people out there who think at some point Roku's not going to exist. Right? So you have the Googles of the world, you have Meta, and then you have platforms that do what Roku does, but not just on content, not just on TV, right? So the Trade Desk is the king. So announcement that the Trade Desk was going to get into TV, and they already have a partnership with Roku, but they were going to create their own. I think it's called Ventura platform. That was not good for Roku. But now you have analysts out. So first you had Wedbush this morning saying that their channel checks over the weekend and Black Friday and Cyber Monday show that Roku TVs are selling better than expected. I'll take it. So that was the first hit. So that's a good thing. And then you have another analyst coming out saying that Trade Desk should buy them. And they made a nice case on it, saying that it's a nice vertical acquisition. So considering Roku was a 90+ stock to start the year, I mean, here it is, nearly 12 months later, you can get a discount on a buyout with possible headwinds of earnings out of the way, right? So you got 3 more quarters to see what the company is up to, and they're still growing. They're still growing not only the platform users, but then the amount of hours and average revenue per user that's on the platform. So they're growing not only organically, not only acquiring customers, but then growing organically. So anyway, I can go rants for a while. I was looking for later strikes. But we've seen what happened in the past a lot of times with Roku, and I didn't want to be a spot where I spend a crazy premium for a higher strike and then I have to stare at it. So meaning there's a downgrade or something tomorrow, and the calls are pretty much left for dead for the next 2 weeks. I don't want that to happen. So instead of getting December 20th, I went and got the weeklies. They're getting close to being a double. Uh, excuse me, there were 55. Yeah, 55 by 59. I I'll try maybe before the end of the close, got 30 minutes. If they get to 60, maybe I'll lock some in, just cover costs. You never know, but at the same time, this could gap and run over $80 tomorrow. There's been some massive multi-day short duration runs on Roku before where the calls, which at the time the premiums were inexpensive, became expensive because of the huge run. So also another good sign so over its 50-day moving average is 73.79. So just even on a technical basis, good to go. All right, so cross my finger on that one. Not going to talk about it anymore. And then the disappointment of today. So all the small cap names, the Peloton, the TDOC, the JOBY, all look great at the open, and then just gave it all back with the rest of the other small caps. It's almost like they traded in tandem. And similar to Friday, it was like I mean, I'm a big Seinfeld fan, so I use a lot of those analogies. But it was like an inverse trading session of Friday, like a bizarro session where the on Friday it seemed like all the small caps were rallying on no news, no catalyst. Um, and then Peloton, TDOC, Joby, and then it's just a reverse today. All three are doing the same, but the other way. The good thing is you take the calls, and I already locked a lot of my Jobies in for some crazy profits. I already locked some of the Teledoc calls in for some nice profits, holding freebies. The only issue is the Peloton, and I take everything with a grain of salt. I try to always find a positive silver lining to some of the moves here. But first, it's consolidation. So at some point, these names are going to take a pullback. I mean, if I knew it was going to pull back today, I would have sold at the open or sold Friday. But of course, hindsight is 20/20. But at the same token, I think they're heading high regardless of these pullbacks. So it's either I have to time a top and time a bottom again to get back in, or I'm just going to have to hold, endure the pain. And I already have locked in most of the Jobies and Teldoc calls. It's just the Peloton is taking a little bit on the chin here. So, uh, and then the calls are only down 30% or so on Joby. Oh, Roku's over 76. Um, and same with Teledoc. Some of the strikes are down like 35%. Same with Peloton. So, all things considered, I mean, it's a disappointing session. Of course, I would love to see him run, but I think it helps out with the charts. Take a look at Peloton. Its upper Bollinger Band was 1030. So you put it in perspective. It's only at lows from last Tuesday, so it's not really a big deal. Also, you take a look at Teldoc. If you look at that chart, I mean, it's setting them some nice churn. They do have their conference at 12:30 tomorrow. I don't want to give. I shouldn't hype it as big expectations because maybe there's no new revelations that come out of it. But I don't even think it needs revelations for it to really start to go. But again, it was at 1160 on Friday at times, so it's not, it's not a huge pull here. I mean, it stinks to see it down 3%. And then Joby. So you take a look at Archer Aviation. That's one of the other names in the space with Joby, and that one was down like 28% at times. And what happened is when they started running, Archer caught up to Joby in regards to stock price. It's a lower market cap valuation. But then, so it was more volatile to the upside, and I guess it's more volatile to the downside because Joby, I mean, it's still taking it on the chin. Where are we at? Down 9% now, but Archer's still down 24%. So all things considered, they're going to be volatile names, small caps, lots of speculation with these names that don't have revenues yet, and people are still trying to figure out the future. Are they going to exist? What's the costs associated? How much dilution? So there's a lot of things going on, but I think for now, like if you were back in 2023, it's a different story for Joby than it is in 2024. And 2025 is going to be, where's Z? Is Z in the house? Z's in the house. What's up, Z? Is Bill Hoang getting pardoned? Bill Hoang, is that what's his name? Who's in jail now? Is it Hoang? I don't know. That guy was great during COVID. All right, so that's Joby. So Square. So 2 upgrades this morning. I was talking about on the watch list on the rant this morning. You had Bernstein taking up to $120. Then you had Goldman Spectacular keeping their buy rating, raising their price target $102. Just like the kick it needed. And it was like Square was running regardless of what the analysts did a couple of weeks ago. And then it got stuck, and it was stuck around 89. And this is like the kick it needs. I was saying it also this morning. It's like there's multiple avenues for Square right now. There's different levers that are getting pulled. You have the crypto side. Now you have the Cyber Monday holiday season shopping. I mean, this is all so bodes well for Square. So I've been saying I think it goes to $100. I need to get some more calls to play for that, but I'll wait for that 94, 95 area to break and hold. Uh, and then you look at long term, and this is a chart from back in the summer when I played the calls for some nice profits. It's over its 50, and just look how high it is over that 50-day moving average. Very impressive. All right, so that's square. I'm going to keep calling it square. I'm not going to call it block, although I just called it block. Just some other tidbits here. Well, the other names, Lemonade. I've been talking about trying to get back in on a pull. It's down 11% today, but then you look and it puts in perspective to see where it's come from, and it might go another 11% tomorrow and the next day. But I think at some point it's going to take back off into the 60s, 70s, 80s. And I think some of the reason too is you look at Lemonade, almost like it gets lapped, it gets all grouped into those fintech names. Fintech, excuse me, Affirm, Upstart, Sophie, Lending Club, Lending Tree. They're all kind of associated. It seems like it gets pushed into that. And I think Upstart got downgraded. I guess you have cautious analysts saying, oh, all these fintech names are getting hyped up. I think rightfully so. I mean, you take a look at, Upstart was a $300 stock back post COVID, or was that a firm? All of them were substantially higher than where they were, but some have come back. You look at Lemonade, don't be surprised at some point. I was looking at the calls before, and Crave had posted in the chat room about the huge volume, and I think it's the 55 weekly strikes on Lemonade was accounted for like almost half the volume for the options. Right now, there's 8,400 contracts traded on the 55 weeklies, and there's only 22 calls traded. So you're talking almost a third of more than a third of the contracts traded today on the call side are all the December 6th 55 strikes. And I don't see, I'll have to do more digging. But the thing is, I looked and it's like it's a $5.40 implied move. So you're talking it's still a 11-12% implied move for weekly strikes that expire on Friday. So that's too juicy for me. I mean, maybe it does go to $50, but is the risk reward there for me? It's not there for me. If the premiums start to evaporate a little bit, I'll look for some strikes. I mean, you look at the December monthlies, $8.50 implied move. I mean, that's like nearly 20% implied move, and they don't have earnings. There's no catalyst, right? The only catalyst is that, or the only reason the implied volatility is so high is because of huge move since November. So, I mean, don't get me wrong. If you think it's going to $80 before December expiration, by all means. But to me, that's the meat. The crazy meat has been pulled off that bone. I think there's still plenty of meat left, but I don't know if it's going to be with those premiums. The risk reward, the payout's not worth the risk on that. All right, so that's Lemonade. Intuit, I keep looking at Intuit. Did it break the 50-day yet? If Intuit breaks that 50-day at 632, let's see if I have it up here. Of course I don't. I got close. It bounced, right? It did it again. But I keep trying to do digging, right? So I think 25 or 28% of their businesses, they have 4 different segments, right? They have the small business with QuickBooks. Then they have their personal, which I think some of it's the tax off. Oh no, Intuit and MailChimp, right? And then they have their tax software, which is the one I'd be looking at, the consumer side. That does like 25 or 28% of its revenue. You have to think if there's any kind of sniff that they're going to do anything with how taxes get filed, preparation fees, and all that fun stuff. And Intuit has already survived, free tax forms, free this and free that. I don't know. I think even if it doesn't impact their business too much, just the possibility of it might put some pressure on the stock. It's already taken a hit post-election. It's sitting there. It's like precariously above, looking off the cliff. So don't be surprised if I get them. I mean, it's been bouncing. Every time it hits that level, it bounces. So the time it doesn't, then I think it heads down, possibly to 600 or so. That's it. I'm out of breath. I'm probably going to close some of the ROKU calls in a second to cover some costs. They're 80 cents now. Are they 80 cents? That's my 80 by 86. Yeah, I'm going to close them in a minute. I'll be back. Let's have a great day, folks. Rest of the day. I'll be back on audio. Rock and roll.